much to all of you. Do well and don't forget to be
Okay, hi guys, good morning. Welcome to your first technical topic discussion of the CIBOP program. So our first topic of discussion is the introduction to financial system. Guys, just checking, is everyone there and are you able to listen to me here clearly?
Good morning, sir.
Good morning.
How are you, sir?
I'm good, thank you. I hope all of you are also fine.
Yes, sir. Fine too.
All right, so let's start with our technical discussion now, okay? So let me first ask you, what is your understanding of an investment bank?
Sir, can I answer?
Yes, this reserve. Yeah, please attempt it.
Sir, investment banks are basically the banks are generally invest in the financial market instruments like bonds, derivative, commodities, currencies, in the money market instrument. What are the SEBI guidelines?
Okay.
IMF guidelines, World Bank are also portrait this.
Anybody would like to add to what he said?
Investment banks helps the big high net investors to raise capital. They provide various services, financial services such as acquisition and mergers and financial research services.
All right. You said raising capital. Yeah. What else, guys?
They are also useful for helping to the IPOs, to the startups.
Yeah, that would come under raising IPOs,
Yes.
raising capital. M&A and
They help the public with hedging, trading, sales, financing.
they also provide trading services. What else? Okay, these are the main activities of an IB, but depending upon the size of the IB, they may be involved in other activities. Okay, so they may be involved in research as well and asset management as well. Now let's try to understand these points, guys. First is raising capital. Okay, so what IBs do is they help the companies, governments, banks, etc. to raise funds. Okay, and now how do they help them? By helping them out in the issuance of equity or bond. Okay, and when we talk about issuance of equity, they help them out in the processes of IPO and FPO. Okay, and they also help them in raising funds through bonds. Okay, so the borrower can be anybody, right? It can be a company, it can be government, it can be any bank, but they all might reach out to an IB to help them out in raising funds. Okay, so later on, when we move to cash equities, which is our second topic, most probably tomorrow we'll start it. So there we'll discuss about how the investment banks helps the companies in the IPO process. Okay, we'll go from start of the IPO process till the end of it. So that will give you more clarity. Okay. Next is M&A activities. How they help in M&A activities is by providing you the research services, okay, by helping the companies out in valuation and all right. So guys, talking about M&A, let's say there is a US company. Let's say there is Tesla, okay, which wants to expand its operations into India. Now, how can they do it? There are two ways. Okay, one is organically, and other is inorganically. Organically means they would themselves come to India, set up a factory themselves. A factory or the production line themselves and start the production and other activities in India. Inorganically means they will acquire and integrate them. Okay? So that's how they can also confirm their presence in India by acquiring an Indian company. Okay, so now if they are looking to acquire an Indian company, right now they don't have much idea about the Indian market. Okay, which are the good companies, good auto companies in India, which they can acquire. Okay, so what would Tesla do? They would reach out to Tesla would reach out to an investment bank. Okay, let's say JP Morgan, and let's say it's Mumbai branch. They will reach out to JP Morgan Mumbai that okay, please help us in finding out a good Indian company which we can acquire to set up our presence in India. Okay, so what would JP Morgan do is they will find out a list of, let's say, 5 to 7 good companies which Tesla can acquire. Okay, so they will come up with company 1, 2, 3, 4, 5, 6, and they will go back to Tesla that okay, as per our understanding, these are the 6 companies which can be a good target companies for you to acquire and establish your presence in it. Yeah. From these 6 companies, Tesla might think, okay, company 1 is good and company 4 is good. So tell me more about these. Okay, so JP Morgan would tell, would go into a deep dive for these companies and give all the details related to these companies for Tesla. Then finally, Tesla will decide, okay, we'll go with company 1. Okay, so now they will provide the valuation of the company, and they would also help in arranging a meeting, negotiating between the 2 parties to close out the deal. Okay, and in doing so, they will charge a fees from Tesla. Got it? That's how they help out in the M&A activities for the companies. Next is there is trading services. Okay, if I ask you guys from all these 5 activities, which one do you think is the most important or biggest business activity for an IB?
Sir, asset management and research.
Okay, what about others? Guys, make a guess. It might be wrong. Don't shy away. Attempt the answer. Which of these do you think would be the biggest business for an IB out of these 5 activities which we have mentioned? Guys, you are going to be a part of IB, okay? So you should be clear what is their bread and butter.
Sir, research.
Okay, what about others? Anushka, Diksha, Mansi.
Sir, can you
Sir,
repeat?
raising
I just
capital.
missed.
Raising capital, okay. Anybody thinks raising capital?
Raising capital and research.
Raising capital.
Research and raising capital.
Okay. Everybody thinks these two? Guys, their biggest activity and their bread and butter is trading services. Okay. Now, we have never heard about it, right? Because we are part of retail participants in the financial system. Okay. We are not an institute. We don't deal with IT. Right? Now, if we have to trade, what do we do? Does anybody trade in the stock market, guys?
Yes, sir. I
Yes,
have
sir.
little kind of knowledge of trading, sir.
Okay. So, if you trade, do you deal with an IB?
No, sir. We are retailers, so we don't.
Sir, I don't trade, but I invest in some of the mutual funds.
Okay. Okay. So, do you go to IB to invest in mutual funds?
No, sir.
No. So that means they are not helping us out. So whom are they helping out in trading services? They help the
Big
Company.
institutes, sir. FIIs.
very good, right? So guys, for us, Zerodha makes sense, Sher Khan makes sense, right? But for a big company, let's say there is a big mutual fund, Zerodha will not make sense. Okay, for them, and IB will make sense. Okay, so IB can act as a agent for them. Okay, that means a broker for them, or act as a ST. Okay, we are talking about for institutional investors.
Sir, voice is little bit fumbling. Sir,
Little bit or too bad?
little bit, sir. Little bit.
Okay. Please check now, is it better?
Yes, sir. Yes. Thank you.
All right. So guys, when we are talking about institutional investors or HNIs, and HNIs also super HNIs or ultra HNIs. Okay. So they would help these people out. These are the audience for IB. They will help them out in placing their trades. Okay. So they can act as a broker for them, or they can act as a dealer for them. All right. So can anybody tell me what are the institutional investors?
Sir, domestic institutional investor, foreign institutional investor, portfolio.
Yeah, what is an institutional investor?
What's that?
What is an institutional investor? Whom do we call as institutional?
Sir, in institutional investor means a group of person who themselves formed in a group.
Like mutual funds and pensions company that have a large market.
I mean, mutual fund is an institutional investor, hedge funds, pension funds,
Insurance company.
insurance companies. Okay, trust or a foundation may also be interested in making the investments. So they will help these people out or attract these.
Sir, banks are also included in this.
Yeah. Bank is also a big bank wants to make an investment. Corporations. Okay. So whoever wants to make a large trade, they can ask an IB to act as a broker for them or a dealer. Okay. These people will not go to Zerodha or Sher Khan. right? Although they would love to have these people as their clients, but they would not be interested in taking their services. They would rather go to a more established financial institute such as an investment bank to help them out in their trading activities on a day-to-day basis. All right. And guys, this is the main business for IBs. This is their biggest business. And see, you think from a logical perspective as well. How many IPOs are there?
Sir, this was the year of IPO. So many startups are going for the IPO, sir.
Yeah, I mean, this was the year of IPOs because last year we had very few IPOs.
Sir, because they also raised 1 lakh crore of capital fund through IPOs.
Yeah,
Target is by
but
December.
but guys, see, there are a lot of investment banks, and we don't have that many number of IPOs. Yeah. So if investment bank handles 1 or 2 IPOs in a year, that will not make sense for them, right? Similarly, how many M&As are there? Few. Okay, but trading happens a lot. For example, if I talk about any big investment bank, you make an estimate, guys. Let's say I'm just talking about one investment bank, let's say StockChain. Okay. Can you make an estimate how many trades they handle in one day? Worldwide, okay? So I'm asking, StockChain would handle how many trades in one day for its clients? Make a guess, guys. What do you think would be a...
Sir, it would be many, so we don't count how many.
So there is the handle around 1 lakh plus trades in a single day, okay? By a single day. So this is the amount of, and these would be large trades, okay? It will not be like buy 100 shares for us, sell 200 shares for us. These would be very large. Okay? So you can assume, okay, if they are charging a brokerage on all these trades, the amount of money they would be able to generate. That is their biggest business activity. And guys, most probably you would also end up in this segment of the investment bank. Okay, that's where we have a lot of openings.
Can we write all this?
Yeah, please, I'll give you time, okay, don't worry. First try to understand everything. Next, we have the research activities. Now, what do they do in research is, guys, they will analyze the companies, they will analyze the industries, they will analyze the companies. Okay. Now, have you heard about equity research, guys?
Yes, sir.
Yes, sir.
Okay, what is equity research? When you analyze the companies. Okay, it can be a private company, it can be a public company. Similarly, there is industry research and economy research also. Okay, so they engage in all these things. They do the research for all this. It helps them out internally also to serve their clients. Yeah, and they may also sell the research reports. Okay, so they would prepare the research reports for their internal purpose or for their external purpose of generating sales through selling of the reports. Okay, Last is their asset management. Now, what do they do here is they provide the portfolio management services. The clients, as well as they engage in fund management activity. Okay. So when we talk about fund management, you have heard about mutual funds, hedge funds, right? So they can also engage in providing you the opportunity to invest in their mutual funds or hedge funds. Okay, so they can engage in, they can launch the funds and you can invest in them. All right, so guys, if we talk about a big investment bank, that would be involved in all the 5 activities. Okay, but if you talk about a boutique investment bank, that maybe just focus on 1 or 2 activities, not all. Okay, usually they may not be involved in this. Okay, they might be just involved in, let's say, M&A and raising capital. But if you talk about big IBs such as JP Morgan, Citi, the names you know, right? They would be involved in, we call them big bulge investment banks. They would be involved in all these activities. Okay, so guys, now I'll give you some time. You please note it down. If you have any questions, let me know.
Sir, you shared some movies, sir. So I watched the Inside Jobs documentary, sir. It was very interesting.
Sorry, your voice is not clear. Can you repeat?
Sir, you suggest some movies of investment banking, sir. I watched Inside Jobs, sir, documentary.
Okay, how did you like it?
Yes, sir. It was so very interesting.
Very interesting, right?
Yes, sir.
Yeah, guys, it's really interesting. And once you have a lot more idea about the IBs, okay, let's say when we are almost done with the course, you will find it even more interesting because then you will be able to relate it to it even better. Okay.
So what is portfolio management services?
Okay, good question. What is portfolio management services? Guys, let's say there is a foundation. You know what is a foundation?
No, sir.
Okay. Guys, do you know these NGOs?
Yes, sir.
Yeah, these are non just like foundations are also the non-profit organizations which are engaged in providing some social benefits to the society. Okay.
Okay.
So they are like doing the social work, but on a much larger scale. Okay, so there can be a foundation for helping out in medical research. There can be a foundation for treating a particular disease in a country. Okay, so they are doing some social work. Now they get funds, right? They want to invest the funds, right? So they can reach out to IB that, okay, help us in investing the funds. Yeah. So what would IB do? IB would sit with the foundation and discuss with them, okay, what are your risk and return objectives? Okay, how much risk you are willing to take, what is your ability to take risk, and how much returns do you want? Okay, they will also look at various constraints for foundation that, okay, they need the money after 1 year, so their liquidity needs are high. They want to save tax. They don't want to invest in particular types of companies, or they have any legal constraints in terms of investments. So they will discuss all the things with the client. It's like a client for the investment bank. Yeah. And once they have understood the client properly, they will provide them customized portfolio management services in which they will do asset allocation for them. security selection for them. Okay, so based on their understanding, let's say they decide that, okay, we'll invest 30% of your money in equities, we'll invest 20% of your money in bonds, we'll invest 10% of your money in gold, and we'll invest the remaining 40% in government securities. Okay, so it's like the customized services provided to the client based on their return and risk objectives and their constraints.
Hello, sir. Am I audible?
Yeah, please go ahead.
Sir, I wanted to ask, when the IB provide trading services, what do they help the companies to trade in? What are the...
No. Have you ever traded in the market?
No, sir.
Okay, when you trade now, there is a broker. Okay, for example, if I trade through HDFC Securities, HDFC Securities is my broker. Okay, if I trade through Zerodha, Zerodha is my broker. Okay, so we trade through broker. Now, broker charges us a brokerage. Okay, let's say 0.25%. That means if I place 100 rupees trade with the broker will charge 0.25 paisa. 0.25 rupees, okay?
Okay, yes, sir.
So that's how the broker earns. And they act as a broker for large trades. Okay, larger the trade, larger will be the brokerage, right?
Yes, I got it.
Sir, I have one question, sir.
Yeah.
Sir, in fund management activities, you say some mutual funds and hedge funds. So what is the main profile of hedge fund managers? What they do basically?
They manage the funds of the investors as per the mandate of the fund. Okay. Have you ever invested in a mutual fund?
No, sir, not mutual fund, in share.
Okay. So what happens is, let's say there is a large cap equity mutual fund. Okay. So the mandate given to the mutual fund is that, okay, you can only invest in large cap shares. You can only invest in large cap companies. Okay. So what the fund manager will do is from these 100 large cap companies of India, it will pick 20-30 companies and invest in those companies. So the fund manager's main role is to take care of the profit and loss for the investors, to make the final investment decisions, when to buy, when to sell. That call will be taken by the fund manager, and the fund manager would be acting based on the mandate of the fund. Okay, he cannot just do randomly anything. He has to invest as per the mandate given to him, as per the objectives of the fund.
So fund manager is appointed by the AMCs.
Absolutely.
Okay.
So what is the difference between MF and HF?
Mutual funds and hedge funds. Okay, don't worry, we have a separate topic of asset management in which we are going to discuss the portfolio management services, mutual funds, hedge funds, all. Okay.
Okay, sir.
So what is HNIs?
HNIs, okay, high net worth individuals. Okay. For example, let's say I have I have my house, I have some savings, I have some fixed deposits, I have my PPF account and all. Okay. So if you combine everything, that becomes my net worth. Okay. Whatever I am legal owner of, that is my net worth. Now you look at a person like Mukesh Ambani, he would have a very high net worth, right? So
Yes, sir.
these are Tata Ambani's, Birlas. Okay, these are the people whom we call as high net worth. Okay,
Sir,
yeah.
sir, what is the position of world's famous investment banks? Because the financial crisis in 2008, so what is the position right now of the investment banking?
I mean, the trust factor has gone down, and the regulator, lot of regulatory changes have happened. Okay, so when we move to level two, we'll discuss about it.
Yes.
Okay, right now it will not be easy for you to understand. For example, Lehman Brothers, Bear Stearns, investment banks collapsed at that time, right? Before that, nobody thought an investment bank can default or collapse, but that happened, right? So the regulators really got involved into the working of the investment banks after the 2008 financial crisis, and they understood that we need to monitor them. Okay, what are they selling, what are the products they are selling, how much risk they are taking, these things should be in control.
Sir, the role of economist is very important in the investment banks, sir,
Role of an economist,
in investment banking.
uh, not really. I mean, economist um, would be more useful in, let's say, the central bank of the country, yeah, or with the government, which entities which need to look at the economy as a whole and frame the rules and regulations, okay, which are working on the framework on how various financial entities should work. Okay, there the economist would have a bigger role. Okay, for example, RBI would be looking out for economists. Guys, noted.
Yes, sir.
Okay. Now, from what we have discussed, can anybody tell me what is the difference between an investment bank and a retail bank?
So the main difference is that the investment bank is engaged with the institution, large companies and institutes, and the retail bank is with the commercial people, like retail individuals.
Right, guys. What else?
Services provided by investment banks are more customized, whereas retail bank provide more standardized services.
Yeah, that's right. Okay, so they are different in terms of the clients they cater to, the kind of services they provide. Anything else? Okay, and guys, main point is what is there?
The investment bank is used for raising capital, but retail bank just for the banking services.
Yeah, I mean, services they provide are different. We have discussed that. And guys, their business model is also different. Okay. So first of all, IB is serving the large clients, corporates or ultra HNIs. The services they are providing are not like deposits and lending. Yeah, they are providing these advisory or trading services. Yeah, and their business model is fee based. Okay, they earn through fee or commissions rather than the difference in the interest rates between the lending and deposits. So guys, you should be clear how is an investment bank different from a retail bank. Okay. Please parallelly make your notes. If you have any question, let me.
Sir, UTI is also a client for the investment banks.
Yeah,
Okay.
institutional investment. Okay. So guys, we'll go straight into our topic now, which is the financial system. Okay. So today is more like the introduction about the financial system as a whole. Okay. All right. So it has five pillars. Guys. The financial system is the entire ecosystem. Okay. And in that ecosystem, we have the participants, we have the markets, products, regulators, and services. The combination of all this constitutes the financial system. Okay, so we have five pillars of a financial system. Everybody plays their role, and the combination of this, the financial system, it includes everything. So it's a very broad term. It's an umbrella term which includes all the five things. Okay, so guys, please understand now we are talking about the entire financial system, not just the investment banks. Okay, a lot of our discussion is going to be specific to investment banks as we move into the program. But right now, today, we are not focusing on investment banks. We are focusing on understanding the entire financial system. Okay. Investment banks are an important part of the financial system. Okay. But they are only a part. Today, we are talking about from a much broader perspective, that is the entire financial system. Okay. Now, guys, for this entire financial system to work properly, it needs to work at three levels. domestic level, regional level, and international level. Now, can anybody tell me, guys, why does it need to work at 3 levels? Why not we can just have a financial system which is working at a domestic level? Why does it need to work at all the levels to make it a robust financial system? Think and let me know this.
Sir, can you repeat, sir? I just missed.
Yeah. So this is our financial system, which includes everything. Now, what I'm asking you is, why does this financial system needs to work at all the levels? Okay. Why can't we have a good financial system which is just working in India, let's say? Why do we need to work it? Why we need it to work at all the levels together?
Sir, for educate flow of funds.
Yes. Good attempt. What else?
Because
So-
market are different and
Markets are different, okay?
Sir, in each level the participants are different and the products are different. The services are different.
Okay.
Yes, a lot of the services will be limited if they are only providing at the domestic level.
Yeah, good point.
To direct the flow of in saving and investment.
Mm-hmm. Right, guys. So you have good idea about it. See, every country in the world is different in terms of the resources they have. Okay. So whether we talk about natural resources, man-made resources, skilled labor, etc., no country or region has everything in abundance. Yeah. For example, in India, we have a lot of skilled manpower. Yeah. But not the most advanced technologies, right? Whereas if we look at US, they will not have that much manpower, okay, but they will have a better technology. Yeah. So the idea here is that every country needs to leverage other countries' resources. Okay, nobody has everything. Okay? So everything needs to work together to create a successful financial system. Okay. So each country needs some sort of products or services or resources which the other country has. Okay. And they want to buy those things in which they are currently lacking. So there has to be a trade at all the levels for the entire financial system to work properly. For example, guys, let's suppose we want a very good mobile phone. Okay, very good quality mobile phone. Do we have any Indian companies which are providing such phones?
Samsung.
Samsung is not an Indian company. It's
no,
a
sir.
South Korea based entity.
Motorola, sir.
Motorola, I'm not sure. Is it India based?
No, sir, it's not India.
No, sir, not. It's not.
India does not have mobile.
India has
Only
brands
Nokia.
like brands like Lava Spice Jet, I think, which also got discontinued.
Yeah, guys, but I'm talking about a very good quality mobile phone. Okay, not just any mobile phone.
So India doesn't have any good quality mobiles.
Okay, for example, Apple is a very good quality. Samsung is a very good quality. Nokia is a trustworthy brand. So, do we have these? I mean, we have these in India, but these are not Indian companies, right? For example, Apple is US based, Nokia is Finland based, Samsung is Korea based. So, trade with these companies needs to happen, right? For us to get these mobile phones. And for such a trade to happen smoothly, we need a robust financial system. Okay, can the trade happen without all this, guys? Can smooth trade happen if we don't have the financial system working?
No, sir.
No, sir.
Okay, so everything should work at all the levels, then only we can reach out to a South Korean company or a US company or a European company to have a smooth trade with us. And guys, why do we need all this? I mean, what is the goal of the financial system?
So to boost our economy, sir.
Yeah, right. That's a correct answer. Okay. See, if you don't want growth, if you don't want the betterment of your citizens, you don't want it. You don't need it, right? But if you want to improve the standard of living of your citizens and you want the economy to grow, you need to have this robust financial system. Okay. So the goal of the financial system is to accelerate the growth of an economy. All right. Can anybody tell me why do we need to accelerate the growth of the economy? Do we need it?
So that people can have a better standard of living.
Yeah. Right. See, guys, all of you must be in your 20s, right? So let me ask you, if you remember your early days, do you think the standard of living is better now as compared to, let's say, 15 years back?
Yes, sir.
Yeah. Are we living better today in terms of the facilities, standard of life?
Yes, sir.
Yes,
Yeah.
sir.
Why?
Technology has been improved and development is
Because
taking place.
economy is boosting day by day, sir.
Because of this, okay? Because our economy grew in the last 15-20 years in terms of the job opportunities, in terms of infrastructure, in terms of income levels or technology we have today. Because our economy improved in all these levels, that's why we are able to live a better life today. And 20 years down the line, hopefully it will be much better than today. Yeah, because we keep on growing at a fast pace. So the point here is, if you don't push the growth of the economy, then the standard of living of the citizens of the economy will not improve. Okay? Citizens or the people of that country would get left behind as compared to other countries. Yeah. And also, if the pace of the growth is slow, let's say, nobody is trying to accelerate the growth, nobody is trying to push the growth, then what would happen? It would take a lot of time. It would take a much longer time to see any results. Okay. For example, the results that you have seen in 15 years in India, it might take 50, 60 years if you don't try to push the growth of the. Okay. So you have to, everybody in the world, almost all the countries in the world, aim to grow fast, aim to accelerate the growth of their economies to provide a better life to their citizens. Okay, there can be some exceptions, guys. Not everybody would focus on the growth. Okay, for example, you have some countries which are more focused on the happiness of their citizens or more on the religious aspect. So they might not focus on GDP growth as such, but yes, these would be exceptions. Most of the countries would focus on growing the economy as a whole, which would automatically help their citizens. Okay. And for that to happen, To accelerate the growth of the economy, what do we need? We need a robust financial system. Okay. Please note it down. If you have any questions, let me know.
Sir,
Yeah.
sir, which factor is dependent to growth of an economy to boost? Financial system is one of the part of the economic growth. How many other factors are dependent on this?
See, there should be a supportive government. Okay, there should be supportive policies set by the regulators that boost the business environment of the country, that boost the imports and exports trades with other countries. Okay, but all of that can only work if you have a good financial system. Okay, for example, if I think that okay, I want to have a very good business environment, I want to encourage everybody to set up their businesses, to do imports, exports, all that. But if I don't have the financial system, nothing can be done, right? Nobody would trust us if we don't have the banks, if we don't have the payment gateways and all. Nobody would do the trade with us, right? So it's like the foundation. You have to have this robust financial system. On top of that, other things are required, but without this, that will not. Okay. What do we mean by robust financial system, guys?
That's strong.
Yeah, I mean, how would you call it strong or robust? When would you call it robust financial system?
which is strong enough to handle the variability.
Yeah, right.
So when there are no more barriers or little barrier to trade or something like that.
So basically, the system which ensures enough liquidity. Okay, there are a couple of things. So the financial system can ensure that. We'll call it a robust financial system. Okay, the financial system which ensures enough liquidity. Okay, which ensures proper allocation of funds. Okay, which has a good infrastructure and technology along with. These are some of the basic things which should be ensured, and then we'll call it a good financial system. Okay. What do we mean by ensure enough liquidity is somebody would have extra funds and somebody would be in need of funds. Okay. So whoever is in need of funds has the option to get those funds. Okay. Whoever wants funds should be able to get those funds. So you should not feel stuck just because of lack of funds. Okay, there might be a cost attached to it. Okay, you might have to pay interest and all, that's fine, but you should be able to get the funds. Okay, because somebody is having extra funds and you want funds, so the financial system should ensure that there is enough liquidity. That means the funds are moving from the lender to the borrower in a very smooth manner. Okay. There should be proper allocation of funds. That means you should have multiple options where you want to invest your funds. Okay. Now it's up to the investor where he wants to invest. So depending upon his best use, he will invest the funds in that asset. Okay. But you should have the option. Okay. I should not be restricted to, okay, you have only the option of FDs. So if you want to invest only in FDs. That is not proper allocation of funds. Maybe I can allocate my funds in gold, real estate also, if I have the option of doing so. Okay, so the financial system should ensure that there are enough products, enough options available for the proper allocation. It should have good infrastructure or technology. For example, now we have the exchanges, we have the clearing houses. So they give us the trust. These are the entities which we can trust and blindly place our trades, right? So there is a proper infrastructure. It's not that I have to depend upon somebody, I have to trust somebody. No, I can depend upon a financial institute. Okay, that's the kind of infrastructure and technology, obviously, that okay, I don't have to go anywhere. I can use my laptop and place the trades, buy or sell the securities. Okay, that's the level of technology we have now. Okay, and low transaction cost, obviously, that okay, it should be competitive. Yeah, so if we just have one broker, they can charge us anything. But if we have a lot of competition in the market, the brokerage would come down. Yeah, so it should not be very expensive for me to, let's say, buy shares of any company or buy bonds of any company. Yeah, so the transaction cost should be okay. Guys, in very simple terms, on one side you have the lender. So he is someone who has and on the other hand, we have the borrower. He is someone who is looking for funds. So what should happen is there should be an easy movement of funds from the lender to borrower. Okay. In very simple words, this is what we call as ensuring liquidity. Okay, so one side you will have the entities who need funds, and on one side you have the entities which have surplus funds. Okay, now these can be any entities, guys. This may be individuals like you and me. This can be companies, these can be banks, these can be governments. Okay, so any entity could be a lender or a borrower, right? What we need is a smooth flow of funds from the lenders to the borrowers, and the financial system should be able to ensure this. Okay, is it's not as easy as it sounds. Okay, we need to ensure a lot of things, like there should be a proper infrastructure, there should be a proper trustworthy financial institute in between the two parties. Yeah, there should be proper tracking of funds. There should not be any leakage of funds. Yeah, there should be rules and regulations which make sure that no one is able to cheat. Okay, there should be enough products for the lender to invest in. There should be institutes which are providing the services, required services for the borrower and the lender. Okay, so a lot needs to happen in between to ensure this. Okay, and that is where the financial system is going to come. So if you look at it in more detail, it would look something like this. In between, you will have the markets, the regulator, you have the products and services which will ensure. All right. Okay, so to ensure the smooth flow of funds, everything should be in place. What I mean by these is financial markets, financial intermediaries, financial regulators, financial products, and financial services. Okay? And that is where our financial system is going to come into picture. If we have a robust financial system, lender would never worry about lending the money, and the borrower would never have to worry about getting the funds. Okay, and if everybody has a lot of investment options and a lot of options to borrow funds, then we can ensure that the businesses are able to function and grow, and similarly investors are able to allocate their funds. Okay, and if we have a lot of competition among these, then it would automatically ensure that everybody would try to advance their technologies, and everybody would try to reduce the transaction costs to provide the best services to their clients. Okay, yes, please note it down. If you have doubt, let me know.
Sir, what is R in this MIR?
Financial regulators.
does it provide any handwritten notes also?
So these are class notes, okay? And apart from this, you have a lot of material on your LMS, okay? So if you face any difficulty, cover all the important things in the class. So you don't have to worry about other things as such. But in case you want to refer to, you can refer to your LMS notes, and you have the videos there also. So for your revision purpose, or in case, let's suppose you miss any class, you can refer to them. Okay, let's go ahead. Guys, we have these terms. See, when the borrower reaches out to the lenders directly, for example, in the case of IPO, okay, it's the company which is directly reaching out to the investors. So, and they are getting the funds directly from the investors. Is happening. This is a direct finance. It's a direct finance where the borrower, it's the company is the borrower, and here is the lender, and the borrower is directly reaching out to the lenders to get money from them. That's a direct finance, and on the other hand, we have an indirect finance when the borrower is reaching out through an intermediary. Okay, the borrower is not directly reaching out to the lender, but it is reaching out to the financial intermediary, who in turn would be able to raise the funds from the lenders and provide the funds to the borrower. Okay, so here you are having the funding finance through an intermediary, so we call it a indirect finance. Okay. Note it down, please.
So can you repeat indirect finance again?
Yeah, indirect finance is when the borrower reaches out and raises the funds from a financial intermediary. Okay, have you gone to bank to take a loan?
Not yet.
But you know what happens, right? You go to a bank and you can take a loan, right?
Yes.
For example, if you are buying a home, you can take a home loan from the bank. Now, bank is a financial intermediary. Okay, bank does not have the funds. Bank gets the funds from the depositors and then lends out those funds. Yeah.
Yes.
There is a depositor, which is the lender. Depositor is lending the money. Depositor is giving the money to the bank, and bank is giving the money to the borrower. So here, the borrower is reaching out to the bank, a financial intermediary, rather than directly reaching out to the lender. He doesn't even know the lender, right?
Yes.
So that's an indirect. Okay. So guys, let's talk about the 5 pillars. That was the introduction. Now we'll talk about all these one by one. Okay. So let me start with the financial markets. Then we have money markets and capital markets. Markets and capital. Now, if if let's say government or any company, or let's say any bank wants to raise funds for more than 1 year, okay, wants to raise funds for more than 1 year. Guys, this is the main point. For more than 1 year, they would go to the capital markets. They would use the capital market instruments to raise funds for more than 1 year.
The stock market are included in capital markets.
I'll tell you, okay, I'll tell you. Whereas if you are talking about less than 1 year, yeah, if you want to raise funds for less than 1 year, let's say 3 months, 6 months, so you would go to the money market and use the money market instruments. Okay. So can you tell me some of the capital market instruments, guys? Equities. Okay. Shares. These are capital market instruments, bonds. Capital market instruments. Whereas money market instruments would be, any idea about these?
Treasury bills, certificate of deposit.
These commercial paper, certificate of deposits, repo,
Promissory notes.
interbank lending. Yeah, these are promissory notes, CDs and CDs. Okay, so have different instruments and they play a different role. If somebody is looking to raise funds for less than 1 year, they will use the money market instruments. If somebody is looking for more than 1 year, they will use the capital market instruments. Yes, capital markets are further divided into primary markets and secondary markets. Sure, you must have heard about these. What are the primary markets? These are also known as new issue markets. As the name suggests, let's say there is an entity which wants to raise funds by issuing the shares or issuing the bonds, then they would do it in the primary market. Here the issuer, here the borrower is involved. Yeah? And once those securities are issued, after that those securities trade in the secondary market. Okay, so our share market, our stock exchange is a part of secondary.
So money market instruments are fixed by the nature as per the tenure.
I mean, returns wise,
Also tenure wise, fixed in nature.
fixed in nature. What do you mean?
Like if I raise a fund through money market instrument, so what is the period? What is the tenure? Like T bills. What is the tenure for T bills? If we raise a fund.
Okay, that can vary, but it would be within 1 year.
Okay.
It could be 3 months, it could be 6 months, it could be 9 months, but it would be less than 1 year. Okay? Whereas if you talk about equities, they don't have any time period, infinite, right? Whereas if you talk about bonds, you will have more than 1 year, and be 3 years, 5 years, 10 years.
So like more liquidity is more in money market instruments.
Liquidity.
Yes, sir. Can we sell T bills anytime if there are enough buyer and seller in this instrument?
Yeah. I mean, if you talk about exchange traded products such as equities, and that to some large companies, they have enough liquidity. And there is a lot of liquidity in the money market also. We'll discuss about it, guys. Don't worry. We have cash equities, we have bonds, we have money market as our topics. In that, we are going to discuss these things in details.
Sir, I wanted to ask, when a company is issuing new shares, it also issues through share market, na? So why this primary and secondary?
No. So we call that market as primary market. Okay. For example, if company is issuing the shares, these are new shares being issued by the company. Okay. So what is happening? The investors would be giving the money to the company, and that is what we call as the primary market. Okay. Right now, the investors are not exchanging the shares between themselves. Okay. But once the shares are issued and they come into the they get listed on the exchange, then it is a secondary market. Okay, so what do we call our stock market? That is like BSC and NSE, right? That's a stock market, right? For us, that's a secondary market where once the shares are issued, we can buy and sell the shares. I mean, exchange the shares between the investors in the share.
Sir, in primary market, we have not the option of selling the shares, right?
In primary market, these are new shares that are being issued by the company. Okay, so once you get the shares, only then you can sell them, right?
Yes.
So first you have to get the shares from the primary market, and then you can trade the shares in the secondary market. Got it?
Sir, what is IBL?
Interbank lending. Okay. Next, we have the forex market, where the currencies are exchanged. Okay. See, guys, this is one of the biggest markets in the world, and in terms of the value of transaction done. Okay, for example, the amount of transactions done in the forex market is more than $6 trillion every day. Okay, so I think it is $6.6 trillion. This is the daily turnover in this market every day. Okay, there are various currencies, most popular being euro, pound, Japanese yen, Chinese, and Swiss franc. Okay. are some of the major currencies which are traded on a daily basis, and the amount of transactions done in a single day is more than 6.6. Okay, this is 2024. This must have increased now. So it is a huge market. Okay, even we participate in this market. Can you tell me when do we participate in this forex market? Have you ever planned to go to, let's say, Singapore?
Yes, sir.
Okay. Have you ever planned to go to America, Europe? Yes. Plan to make a trip abroad. What do you need? You need their currency, right?
Yes, sir.
You need their currency, and that is when you convert your INR into that currency. So you also become a participant of this market. Similarly, if you see, there are importers and exporters. There are various multinational companies which are trading in terms of currencies on a daily basis. There are also the banks which are exchanging payments in various currencies. There is also the government or the RBI or the central bank which needs to maintain certain foreign reserves, So they also deal in the forex market, right? So we have various participants in the forex market, and it is a very large market. All right. Last, you have the derivatives market. What happens in the derivatives market is you have derivative contracts with them. Okay. So it goes to forwards, futures, swaps, derivative contracts which are traded. Okay, we'll talk more about these contracts. We have a separate lecture for forwards and futures, one lecture for options, and 2 lectures for swaps. So in total, we have 4 lectures for these derivatives market, and we'll talk about them in detail.
So derivative is the part of a stock market, sir.
Yes, so we have futures and options which are exchange traded, okay, whereas forwards and swaps are OTC traded. Okay, our stock market, our share market is exchange traded. So you can also divide the markets in terms of exchange traded. We also call it order driven market versus the OTC market, the code driven. So exchange, is any idea about order driven markets?
They are standardized market.
Okay. Guys, have you bought shares of any company? How do you buy the shares?
Sir, I bought.
You bought? Okay. So let's say there is a person, John, who wants to buy the shares of a company. What will he do? He will reach out to a broker, and the broker will reach out to the NSE or BSE stock exchange. And on the other side, there will be somebody wants to sell the shares, so he will also be reaching out to the broker. Okay, let's say he wants to sell the shares, and John wants to buy the shares. What is happening? John would reach out to its broker and the broker would place the trade on the stock exchange. Similarly, Steve would reach out to its broker and its broker would place the trade on the stock exchange. So what is happening? All the buy and sell orders are coming to a central location, that is the stock exchange. These are exchange traded products. Okay, that's why we call them exchange trade, because there is a central party. There is a central institute, central location at which the trading is happening. Yeah. Whereas in a code-driven market, what happens? Let's say John wants to buy some USD. John wants to buy dollars. So he would reach out to, let's say, Deutsche Bank. Yeah. And let's say Steve is there, who wants to buy euros. Steve may reach out to, let's say, Citibank. What is happening is there is no central location. Everybody is reaching out to a dealer. Okay, it's a dealer. This is also a dealer. So there is no central location. There are dealers. There is a informal network of dealers whom you need to contact, and the dealer would provide you the quotes. Okay, the dealer would provide you the bid-ask quotes based on which you can trade with the dealer. So there is no central location as such for these products. So when you talk about equities, we talk about futures, options, and some bonds. Okay, not all, some bonds, maybe just 5% of the bonds would be traded on the exchange. Whereas if you talk about forex, that is currencies, we talk about forwards, swaps, 5% of the bonds. Okay, these things would be traded in the OTC market, and that is code-driven market, whereas others are in the exchange.
So what are forwards?
We'll talk about it. Okay, we have a lecture related to forwards. Have you ever dealt in futures?
Yes, sir.
Okay, what happens in futures? You basically say that okay, I'll buy shares of Maruti on last Thursday. So it is the last Thursday of August. It is 26th August, right? 26th August for 7,400 rupees per share. Okay. If you enter into a long position in the futures contract, that's what you say, right? Are you able to recall? You said that you have traded in futures, right? That's what you do. Am I right? Yes or no?
Yes.
Okay, you seem a little confused. Okay, similarly, we have forwards. In that also, you do the same thing, but you don't have the margin requirement. You do the same thing with the counterparty with somebody else. Here you have the margin requirements. Okay, you need to deposit an initial margin. Here you don't have any margin requirement. Okay, so these are very much similar to futures, but these are OTC. These are negotiated contracts between the two parties, whereas these are exchange. Guys, are we clear with the basics of what is exchange traded and what is OTC market? Are we clear with this much? Don't worry about this. We'll discuss this later on. So,
That's clear.
you clear? Eh? Okay. All right. So let's talk about exchange traded markets a little more. See, guys, it has some features. For example, it has price transparency. Certain features, guys. Example, transparency is not guaranteed. Settlement is guaranteed. Counterparties are Can anybody tell me what do we mean by price transparency? In exchange traded markets, we say we have the price transparency. Does that mean?
So price transparency means in any price we can sell or buy the shares. There is a liquidity between the buyer and seller.
It means everybody can see the price. Okay. Right now, I can go and check out the price of Maruti. Okay. Guys, go to the website. Let's do a small activity here. Tell me what is the price of Maruti right now. What is the stock price of Maruti on NSE?
7090.55.
Absolutely, 7090. Okay. So anybody can check out the price of these products anytime because they are traded on the exchange. So what you need to do, you need to go to the website of the exchange and check out the price. Okay. You may buy, you may sell, you may not do anything. That's up to you, but still you can check out the price. Okay. So it's transparent for everybody in the world can check it. Order execution is not guaranteed. Can you tell me what does this mean?
So sometimes the price you ordered, you do not get the shares for it. Like for example,
Absolutely.
you have ordered 100 shares of Maruti at 7090. It does not mean that you would get the shares. There are a lot of people who have applied for the shares at the same price, so it's not guaranteed that you will get the shares.
See guys, right now Maruti is trading at 7090. Is everybody able to check it out, or do you want me to share the link with you?
No, sir, I checked.
What other?
Yes, sir.
Guys, I put the link on the chat box. You can just use that link to find out the price of Maruti. Okay, So currently the price is more than 7,000. Now if I say I want to buy shares of Maruti at 6,000 per share, what do you think? Would I be able to buy or not?
Sir, if the prices fall, then only you can buy.
Yes, sir. It's a
Very difficult, right? Most probably I'll not get it.
yes.
Yeah, something which is trading at 7,000. Why would somebody give it to me at 6,000, right? So maybe I get it if the share price really falls a lot, but most probably I'll not get it, right? So that's why we say that order execution is not guaranteed. It depends upon the price, it depends upon the quantity, when did you place the order? It depends upon a lot of factors. You cannot say whatever order you have given in the market that will be executed. That is not guaranteed. He says settlement is guaranteed. Any idea about this?
Means broker is guaranteed you that there is a settlement between the that you buy shares
Guys, it is exchange traded, okay?
NSE BSE.
So there is a trusted financial institute in between. And every exchange will have a clearing house. The clearing house will ensure that settlement is guaranteed. What do we mean by it? Let's say I order to buy shares of Maruti. That means money will be debited and the shares would be credited, and vice versa for the seller. Okay. So if your order is executed, I'm saying if your order is executed, you can be sure of settlement. Okay. So if my buy order is executed, then I can be sure I'll get the shares. If my sell order is executed, I can be sure that I'll get them. So settlement is guaranteed once your order is executed. Okay.
Sir, if we sell the share of Maruti Suzuki at the above the 7,090 above level,
Yeah.
how is the guaranteed settlement process is there?
Let's suppose you sell it at 7,100 and your order is executed. Okay. That means you are able to sell it at 7,100. So what do we mean by settlement is guaranteed is you will definitely get the money. Okay. Once your order is executed, you can be sure of settlement. Are we clear?
Yes.
Counterparty is unknown. Guys, do you know when you buy the shares of some company, do you know who is selling?
No, sir.
So that's why we say counterparty is unknown. We don't know who is on the other side of the table. All we know is we are placing a buy order with the broker. But there has to be a seller. Okay, only then the trade can be executed. But we don't know the seller. Okay, seller doesn't know the buyer, buyer doesn't know the seller. So that's why we say the counterparty is unknown, but there is always a counter. Standardized terms and conditions, okay. John would not define the terms and conditions. Steve will not define the terms and conditions. The terms and conditions of the trade would be decided by the exchange. Okay, you have to accept those terms and conditions. And if you are happy, you can place the trades. If you are not happy, you may not place the trades. But terms and conditions would be defined by the exchange. Okay, so these would be standardized for all. It will not be different for different people. Okay. Whereas if we talk about OTC markets, we have different features. Okay. For example, there is no price transparency. Less transparency. Order execution is guaranteed. Settlement is not guaranteed. Counterparty is known. Customized negotiated terms and okay. So what we mean here is we don't know at what price the deal is happening. Okay. For example, here we knew that buy and sell is going on at 70.90. This is the price at which the deals are happening right now. Yeah. But in the forward market or swaps market, we don't know. Okay. If I go to Deutsche Bank, he will give me a different quote. If I go to Citibank, he may give me a different quote. So there is no price transparency as such, okay, that this is the exact price at which the deal is happening.
Fluctuation is at very high, sir, right?
I mean, the difference will not be too much. For example, if I am talking about buying USD, so Deutsche Bank and Citibank may give me a same quote or slightly different quote. But the third party doesn't know, yeah, that what is the deal happening between the John and Deutsche Bank. Do you know this? Does Steve know this? No, right? So there is no price transparency. That means there is no, if two parties are entering into the contract, not everybody would get to know about it. At what price they are entering into the contract. That's what I mean. Okay. Order execution is guaranteed because these are negotiated contracts between the two parties. Okay. So if John is going to Deutsche Bank and they are dealing between themselves, then obviously order execution is guaranteed. Okay. They will execute the order, but the settlement is not guaranteed. What we mean by this is, let's say a certain party is facing a gain or loss, he may not honor the contract. Okay, so we cannot be sure that at the time of settlement, both the parties are honoring the contract. One party would be in gain, other party would be in loss. Yeah, and the party in loss may default, may not honor their commitment of paying to the party in gain. Okay, and because there is no financial institute in between, so they can just simply run away. So settlement is not guaranteed as these are negotiated contracts between the two parties. There is no trustworthy party in between. Okay, it's like John and Steve are getting into a contract, and if Steve is facing losses, Steve can run. So that's why we say settlement is not. Counterparty is known, okay, obviously you know the other party, and these are negotiated terms and conditions between the two parties. There is no exchange which is defining all the terms.
So there is also volatility of a price is greater in this market.
There is less price transparency, okay, but cannot say it would be too volatile. I mean, this can also be volatile, right? This can also go up or down a lot. So we cannot compare the two markets in terms of volatility.
So we have break also in between the session.
Yeah, guys. In fact, I was about to say that let's have a break. Okay. Meanwhile, you can just go through what we have discussed so far. If you have any questions, we will take up the questions after the break and go ahead with our topic. Okay. So let's get back at 11:25. Okay. Let's continue, guys. Is everyone back?
Yes, sir.
Yes, sir.
Ah. Next, we have the financial instruments. Okay. For example, we have equity, and we have market instruments. Okay, such as paper, deposit, treasury bills. Would include the bonds, securities, asset-backed securities, equities, renewal, common shares, shares. You have money market instruments. And guys, you have products. As you can see, there are multiple instruments which can be used by the lender and can be used by the. So there are multiple options available to both based on their needs, based on the return and risk objectives. You can choose what you want to do. There are various products available which you can choose from. Yeah, that's why we say borrower has enough options how he wants to raise funds. Similarly, investor has a lot of options in terms of allocation of his funds. Okay. So guys, our entire level 1 would be focused on these things. Level 1 of our program is based on the product. We'll be talking about all these products in our level 1.
Sir, what are MBS and ABS?
Okay. These are mortgage-backed securities. Similarly, these are asset-backed securities. Noted, Dennis?
Yes.
I'll not go into details now because we'll take up the individual products in different lectures. So we'll go into the details in those sessions. But if you have any basic doubt between these, you can ask me now. Okay. I mean, I'm not sure about the derivatives. You would not be aware of this. So apart from derivatives, if you have are we clear with these?
Sir, what are the instruments
Yes.
in Forex? Sir?
What are?
What are the instruments included in Forex?
Oh, Forex, it's the currencies, okay? USD, Euros, those currencies are exposed. That currencies are okay? And you have various types of Forex trades. Okay, some Forex trades are related to derivatives also. There are different reasons why anybody would trade in the Forex. So take that up all in the foreign exchange class.
Sir, commodities also financial instruments.
Commodities are also financial instruments in the sense that we have their derivative contracts. Okay. So as such, if you talk about a commodity, that's a real estate. That's not a financial asset. Yeah. For example, let's say talk about crude oil or gold or silver or wheat. These are the commodities. So as such, these are the real assets, but what do we have is their contracts. Okay? We have various derivative contracts based on those commodities. So that's where we are going to go. We are not going to talk about physical commodities as such, in real gold and real wheat. We will be talking about the contracts based on the value of those commodities. Please ask guys any questions in any of this? Any basic questions? Do we know what is a mortgage-backed security, guys?
Yes, sir. A little bit.
Okay, that's good. Asset-backed securities, commercial paper certificate. So guys, all right. Let's go ahead for now. We'll discuss these in the upcoming sessions. Okay. You have cash equities. So
Can you tell the difference between mortgage-backed securities and asset-backed securities?
Absolutely. Okay, so mortgage-backed securities are the securities which are backed by mortgages. What are mortgages? Home loans. Okay. So let's say a lot of people have taken home loans. Now they all are going to pay EMIs, and that money will be flown to the MBS investors. Okay. So MBS securities are issued against those home loans. That's why they are known as mortgage-backed securities. Whereas asset-backed security is the security which is backed by any asset other than the mortgage. Okay. In fact, you can also say mortgage-backed security is a type of ABS. Okay, in which the underlying asset is the mortgage. Okay, but there can be other securities which are based on other assets such as car loans, vehicle loans, or education loans, or personal loans, or credit card receivables. Right? So the securities that issued against those assets would be known as ABS.
Okay, sir.
So tomorrow, guys, we are going to discuss about this part. Okay. And on Wednesday, we are going to discuss about this. And on Thursday, we are going to discuss about this. Next week, we will discuss about Forex and derivatives. So in next 2-3 weeks, we'll be covering all this. This is all about your level 1. Level 1 is focused on the products. Level 2 is focused on the processes. So in level 2, we'll talk more about from IB perspective. Next, you have the financial participants. Now, there are many participants. First of all, you have the individual or they can be the lender, they can be the let's say they are acting as a borrower, then what would an individual do? How can individual borrow? By going to the bank and taking a loan, right?
Yes.
How can a corporate borrow?
A company can borrow with the banks.
Also, they can issue securities, right? They can issue bonds or equities, right? They can also use commercial paper for borrowing funds. Similarly, you have governments who can issue securities to borrow funds. Okay. Now, guys, one logical question: would the government issue securities? Fixed income securities? Would they?
Bonds.
So they issue only fixed income securities.
Would most probably issue fixed income securities such as treasury bills, treasury bonds, and all. Why would they not issue equity?
Sir, why would they be like giving the ownership to the general public?
Absolutely, very good. Okay, great answer, guys. Government would not like to lose the control. Right? They would not like to give you the ownership of the entities they own. Yeah, government would like to retain the control. So they don't want to give you the ownership. If they don't want to give you the ownership, they will not give you equity. So almost in all the cases when government wants funds, they issue T-bills, T-bonds. Okay. Next we have banks. Within this, we have various types of banks, but mostly we have IBs, Reserve Bank, Central Bank, or and then the commercial bank. Okay. Now we know what is a commercial bank, right? For example, HDFC Bank is a commercial bank, and their business model is to take deposits and to give out the loans. The difference between the rates is their profits. Similarly, we have Reserve Bank. For example, in India, we have the RBI, in US, we have the Federal Reserve. So these are like the central banks, which are also a part of the financial system. They are also the regulators, and they can also be a participant in the financial market by borrowing or increasing or decreasing the money supply through government securities. Then we have IBs. Okay, we are going to talk a lot about IBs. As we discussed, they are different from a central bank or a commercial bank. They provide different kind of services. Their clientele is also different. We have insurance companies. All right, so they provide you insurance against the loss of a life, loss of let's say a vehicle, right? So even you have medical policies where they compensate you for case of you get admitted to hospital, right? So as these are playing crucial roles in these times specifically, and they can also be a participant in the terms of institutional investors. They get a lot of, you can say, premium amount, right, from everybody who has taken the policy. They pay the premium to the insurance company, and what the insurance company does is collect all those premiums and invest that money. Yeah? So they can also be institutional investors. Fourth, we have the brokers. Can you tell me what does a broker do?
So sell and purchase of securities on behalf of individuals.
Yeah, they find a counterparty for the buyer and the seller, okay, and they earn a commission from the buyer and the seller. Okay, for example, let's say you want to buy a house, yeah. So what do? You go to a broker, right? That help me in finding out a house for sale in this region, let's say. So the broker would know the buyer and the seller. It's the intermediary between the buyer and the seller. It helps the buyer to find a seller and vice versa. Okay, and it may charge a commission brokerage from both. Okay. When we talk about stock market, we have brokers like Zerodha Sher Khan, which are used by retail individual investors. Then IBs can also act as brokers for large clients. Okay. Next, we have the dealers. Who's a dealer?
Sir, how broker and dealers are different?
So what broker does, broker finds the counterpart. Both the buyer and seller. Whereas a dealer becomes the counterpart. For a buyer, what would become the become the counterpart. For example, let's say John wants to buy USD. So John would go to USD bank, take USD from it. Okay. So it is selling USD. USD bank is acting as a dealer. Is acting as a dealer. It is directly dealing with John. Not trying to find a counterparty and match those buyer and seller. Okay. Here the broker is finding the counterparty for you, and it will take a commission from both the buyer and seller, right? But the deal is between the buyer and seller itself. It's not like broker is selling you the property, seller is selling you the property, broker is just an entity. Whereas here, the dealer is selling you the asset. Got it? Is, for example, these commercial banks acts as dealers for government securities or for foreign currencies, corporate bonds. They act as dealers, so you can go and buy it from them. Okay, IBs can act as dealers also for institutional clients or HMS. So IB can be a broker, guys. IB can be a dealer. Are we clear with this?
Yes.
Next, we have the stock exchanges. What is a stock exchange, guys?
Where trading happens, buying and selling of security happens.
Yeah. Okay. It's like the marketplace platform for the buyers and sellers. Yeah. Where the matching of buy trades and sell trades happens. Okay. So what does stock exchange do? Matches the buy orders and sell orders based on certain rules. Yeah. So there'll be rules based on pricing, price you have put the order, what is the quantity, what is the time at which you put the order. So based on various rules, they would match the buy and sell orders. So it's like the central base, it's like a platform which is used for exchange traded securities. In India, which are the stock exchanges we have here?
BSE and NSE.
These are the two major stock exchanges we have. Bombay Stock Exchange and National Stock Exchange. Okay. Any idea about US, guys?
New York Stock Exchange, NASDAQ.
Yes, sir. Hong Kong
Yeah, we
Stock
have
Exchanges.
American Stock Exchange, New York Stock Exchange, NASDAQ. Absolutely, very good.
So Dow Jones is a part of Nasdaq, sir.
Dow Jones is an index.
Okay, like Nifty is the index of NSE, like that.
Yeah, absolutely. So we have the clearing house.
NXDL, CDS.
No. Those are depositories, okay? What is a clearing house? Any idea, guys?
So where the final price of the stock decides
No.
or given to.
Intermediary between the buyer and seller.
No. Yeah, it eventually becomes the intermediary, but what happens, I'll give you a small flow. John wants to buy or sell shares, he will go to the broker. Broker will pass on the trade to the stock exchange. And once Please be on mute, guys, if you are not speaking. Okay. Once the order is matched, what does stock exchange do? It matches the buy and sell. So once the stock exchange has matched the order, what will stock exchange do? Will pass on the matched orders to the clearing house. Once the order is executed, those trades are sent to the clearing house. Okay. Now, what will clearing house do? John, let's say, who wanted to buy the shares, and there was Steve who wanted to sell the shares. So, what would happen now? John is the buyer. For John, clearing house becomes the seller. And similarly, for Steve, who is the seller, house will become the buyer. What does clearing house do? It breaks the trade into two parts. Okay, and for every buyer, it becomes a seller, and for a seller, it becomes the buyer. This is known as the novation process. Okay, guys, please listen carefully. Once the order is executed, is matched by the stock exchange, then that trade is passed to the clearing house. Okay, stock exchange transfers the trade to the clearing house. What would clearing house do? Is it would come in between the trade. Okay, it would come in between the buyer and the seller, and act as a buyer to every seller and as a seller to every buyer. Okay, and that is why we say that the settlement is guaranteed. Okay, once the clearing house has become your counterparty, you don't have to worry about it, right? Because you can trust the clearing house. It's a very, 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 very big event if clearing house defaults. It's like the end of your financial system, basically. Okay? The systems are such in place that it will never default. Okay? So you can be sure that the settlement would happen. So now John can be sure that he would get the securities, and Steve can be sure that he would get them. So that's why we say settlement is guaranteed because of this clearing house. And this process, when the clearing house takes the ownership of the trade, is known as the novation process.
What is the clearing housing? Is any name in India?
Sorry?
Is there any clearing houses like depository like NSDL and CDSL? Is there any clearing
It
house?
has every stock exchange would have a clearing. Okay. For example, in India, we have various stock exchanges such as NSE, BSE, and CXE. So every stock exchange will have a clearing house. For example, we have NSE clearing. That is the stock, that is the clearing house for NSE. Similarly, we have ICCL, I think, which is the clearing house for BSE, and CCL acts as the clearing house for this exchange. So every exchange will have a clearing house, and once the order is executed by the exchange, it will pass on the trade to the clearing house. In US, we have DTCC. It's like one of the biggest depository and clearinghouse of the world.
Sir, is there any role of the credit rating agencies in this?
Credit rating agencies are one of the participants of financial market, but here we don't have the role there. Okay, they are more into providing the ratings for the credit of the companies. For the, let's say, company has issued the debt securities, so they would rate those securities based on the financial strength of the company. Okay, next we have the custodians. Have you heard about the custodian, guys?
Custodians are like the financial institutions that holds the asset of like assets or safeguard and protect the assets.
That's very good, Parithi.
Yes, sir.
From where have you learned this?
Sir, actually, I had an overview of the PPT before.
Awesome, awesome. Okay, so guys, custodians, we don't know about these custodians, but they play a very active role in the institutional market, you can say. From a retail perspective, they don't play a part for us, but yes, from the institutional perspective, they play a major part. Okay, so what they do, they safeguard the cash and securities of the their clients. Okay. For example, we have various custodians such as Northern Trust, HSBC, Citibank, State Street, JP Morgan Chase. These act as custodians also, along with the other services they provide. So they provide custodian services also. What does it mean is they hold the cash and securities of the clients with them. Okay, so let's say there's a mutual fund. Okay. Let's say there is a mutual fund company Invesco. Now everybody is giving money to, let's say, Invesco. Okay, I am investing my money in Invesco mutual fund. You are also investing your money in Invesco mutual fund. Can we trust Invesco with all the money? Okay, Invesco is just a company which can run away, right? So what Invesco would need to do is they would need to keep all of the cash of the investors and all of the securities they have bought on behalf of the investors with the custodian. Okay, so it's like a financial institution which is holding the cash and securities of the client on behalf of the client. Okay. So all the funds which are collected by Invesco would be there in the bank or the custodian. And also the securities would be there with the custodian. Okay, so it is like safeguarding the cash and securities for the clients, and the clients would not be like you and me. Okay, you would not be allowed, or I will not be allowed to open a custodian account. But for an institutional investor like a mutual fund or a hedge fund, it is mandatory. They have to do it. They have to open a custodian account and keep their assets with them. Okay, it brings more trust into the entire system, and it provides more surety to the investors that their money and shares are safe with the custodian. Okay, got it, guys?
Yes, sir.
Next, we have a depository. Any idea about depository? You said CDSL and NSDL, right? These are the depositories. So in general, guys, depository is any entity which can take the deposits. For example, banks are also known as depositories. Okay, what does bank do? It holds the cash. Bank is a depository which holds the cash.
Can you repeat what is a depository?
You said CDSL and NSDL. These are the depositories of India. Okay, so what does depository do is you know about a bank, right? What does bank do? Bank holds the cash, and similarly depositories are there which hold your securities. Okay, so when you talk about it from a retail investor perspective, just like HDFC Bank would be holding our cash, yeah, our money would be stored with the HDFC Bank, our shares would be stored with a deposit. Okay. So have you heard about Demat account?
Yes, sir.
Yes, CDS, you open a Demat account with a deposit. Okay, either with a CDSL or NSD. Okay, these are the two main depositories. They open the Demat account for us to hold our securities. Okay, if your Demat account is a 16-digit number, that means the Demat account is there with the CDSL. If your Demat account is a 14-digit number, that means you have a Demat account with NSD. Okay, so either one you can have, but you need to have a Demat account in which your shares would be stored. Okay, just like you store your money in a bank, similarly depository is where your shares are kept with them, the Demat account. Okay, from an institutional investor perspective, is their securities will be held with a custodian. Okay, but from a retail investor perspective, their securities will be held with a deposit. Okay, so there is a difference. Okay, it also does the legal ownership change. Okay. So let's say you buy the shares of Reliance. On those shares, your name would be, you can say, you would become the owner. Okay, depository will change the ownership to you. Your name would be there once you buy. Okay, but if you sell, your name would not be there in the legal ownership of those shares. Okay, so who will change the legal ownership from the seller to the buyer? Deposit.
Can you repeat again this?
Yeah, I'm saying there are buyers and sellers in the market, right? So when you buy the shares, you become the legal owner. And when you sell the shares, you lose the ownership. Yeah. Who will take care of this? Okay, it happens in your demat account. Okay, if the shares are there in your demat account, you are the legal owner. And if the shares are in somebody else's demat account, they are the owners, right? So who is doing all this? CDSL, NSDL is doing it. Okay, depository does it. It changes the legal ownership from one person to the other when the trade happens. Please note it down if you have any questions.
Sir, you suggested one clearinghouse of US. What is that, sir?
Clearinghouse of US is PPCC. Okay, you can also put it here. In India, we have CDSL, NSDL, and in US, we have the DTCC. Okay. Next, we have the financial regulators. Here we are left with two things. Financial regulators, as the name suggests, okay, these are usually the government entities that play the role of regulating the part of the financial market. Okay, so what do? They set the rules and regulations for the participants to be followed. Okay, so their main objective is to make sure that there is no scope for diversions of funds, there is no scope for cheating, price manipulation. Okay, they will define how the public companies, which rules they need to follow. Overall objective is to bring confidence in the financial markets. Okay, so they will set up the framework to make sure that everything runs smoothly. Okay? For example, for securities market, we have the SEBI in India, right? Who is the regulator of securities market in the US?
Security Exchange Commission.
Federal Reserve.
Okay. No, not Federal Reserve. So we are talking about securities market, not the banks. In India, we have SEBI, who is regulating the securities market, and in US we have SEC. Okay. If we talk about banks, who is the regulator in India?
RBI.
RBI is the regulator. In US, we have the Federal Reserve. That's the central bank of US, which defines the rules and regulations to be followed by the banks. Okay. Similarly, guys, for other products also, you have the regulators. For example, for insurance companies, you have IRDA in India. Similarly, for mutual funds, you have SEBI and AMFI, who are regulating these markets. Regulator is someone who is going to define the rules and regulations which needs to be followed by every participant in the market. Okay, or the rules and regulations which need to be followed by every bank in the country. Similarly, for every insurance company, IRDA will set up the rules and regulations they need to follow. This has everybody joined the CIBOP44 group?
Yes, sir.
Yes, sir.
You guys know about AMFI?
No, sir.
See, this is the Association of Mutual Funds of India. Okay. So it works under SEBI. Okay. So you can say primary regulator for mutual funds is SEBI, but SEBI regulates the mutual funds through an organization known as AMFI. Okay, it is the Association of Mutual Funds in India. Okay? It's a non-profit organization which was established in 1995. Yeah. So the main purpose of AMFI is to inform the investors about the mutual funds. Okay, to develop more
What is the full form?
Association of Mutual Funds in India. Okay, so what it tries to do is encourage the people to invest in mutual funds. Okay, they make them aware about the risk and return profile of mutual funds, and if there are any misconceptions about the mutual fund industry, they try to make the investors aware about the mutual funds. Okay, and they also define in coordination with SEBI, they define the rules and regulations for the mutual fund companies. Yeah, and those rules and regulations would be directed towards the aim that the investor's interest is protected. Okay, so that the mutual fund company is not able to misuse the funds of the investors. They should not be able to cheat in terms of what they are buying or what is the NAV of the mutual fund.
Voice is not clear.
Do you want me to repeat or is it manageable? So basically, AMFI is an organization which tries to protect the interest of the investors in the mutual fund industry. Okay, they make them aware and they also set the rules and regulation for the mutual funds so that they cannot cheat the investors. Okay. So we have 43 member companies currently which are part of the AMFI association, which are registered with SEBI. For example, Invesco, HDFC Mutual Fund and all are some of the members of AMFI and they are registered with SEBI. So they work under the framework of, they work under the rules and regulations set by them. And guys, for anybody to sell mutual funds, they should have a certificate from AMFI. Okay? They should have a ARN with them. It's the AMFI registration number. So you see people who are coming to your home and trying to sell the mutual funds, they should have the ARN with them. They should be AMFI, they should have the AMFI registration number. It's a legal offense to sell, to recommend mutual funds to anybody if you are not ARN, if you don't have the ARN license. Okay, and to get the ARN license, you need to get the certification. Okay, there is a NISM certification used to get this certification done. ARN license, and then you can sell the mutual funds. Okay, so there is an entire ecosystem put in place to make sure that nobody is able to cheat the investors in terms of recommending the mutual funds, or the mutual fund company is not able to cheat the investors in terms of divergence of funds or cheating with the investors. All right, next we have the financial services. Now, we have discussed about these in brief, so I'll quickly revise them. Okay, we have the retail banks, we have the commercial banks, and we have the national banks. The services they offer are different. Okay, for example, we know mostly about the retail banks only. Okay, so what do retail banks do? They open the saving accounts for people. They offer credit cards, debit cards. They give you home loans, personal loans, education loans, vehicle loans, right? So they are dealing with individuals mostly. retail is their customer. Whereas if we talk about commercial banks, they deal with corporates. They are dealing with companies and they help them. These are more customized services they provide. Okay, so their services will be slightly different from retail banks. But yes, their common service would be in terms of providing the current account for the businesses and also lending them out loans if they need funds. Yeah. So deposit and lending is same, only the audience is different. Here they are dealing with retail customers, and here we are talking about corporate sets of customers. Okay. But apart from the deposit and lending, they also provide the corporates some specialized or customized services such as forex services. For example, an importer exporter wants to do forex transactions that they can do through a commercial bank. Okay? They also provide them trade finance services, which can help them in trading with different companies or across the borders. So it is like the corporate arm. This is like the retail arm. There are some differences in services because they are dealing to individuals and they are dealing with companies. Okay. Next, we have investment banks. What do they do? We discussed 5 types of activities, right? Fundraising, M&A services, trading services, research services, and asset management services. Okay, so they are mostly into these kind of services, and their clientele is only the large institutes or ultra HNIs who want to trade big. They would not get into small deals. They would not get into a small IPO or an M&A. They would mostly look out for big deals, and they would charge a commission for providing their services. Okay. Here we have big bulge investment banks and boutique investment banks. Big bulge are the ones which would be providing you all the services, whereas boutique investment bank may just provide you. They might be just focused on providing 1 or 2 services rather than the entire bouquet of services. Are we clear in terms of the different services provided by different banks, guys?
Yes, sir.
Yes, sir.
But as well, the attendance is not yet done. We'll do it. Okay. So that's about the 5 pillars of the financial system is. Just one more topic, the difference between the buy side and sell side firms. Okay, so you can divide various firms into two parts, buy side firms and any idea about this, guys? What is a buy side firm and what is a sell side firm? Heard about these terms?
No idea, sir.
Good. I'll give you some idea, then you help me. Okay? Buy side firms are the firms which have the funds they want to invest. These are the firms which have the funds which they want to invest. Okay? And they can invest in various assets, not just equities, but bonds, derivatives, anywhere. Okay, commodities, forex, can be anything. Okay, but they have the money to invest. Okay, and their aim is to earn profits on investment. Obviously for their clients. So these are those companies which want to make the investments and they want to earn profits on the investments. And there are sell side firms which are more into providing services. Okay, so they provide services to the client. And charge a fees or commission for those services. Okay. Now, if I ask you guys, where would mutual fund fit in?
Buy side.
Buy side.
Buy side, very good. Okay. So mutual fund collects money from the investor. Now they have the funds which they want to invest. Okay. So your mutual funds, hedge funds, they would come here. Okay. Pension funds, they would all come here. Whereas your brokers, firms, your consulting firms, financial advisory firms, they will all come here. Okay. Where would IB come, guys?
Sell side.
Guys, when we talk about
Sell side.
Sell side.
talk about investment bank, which are the services they offer? These are the services they offer: raising capital, M&A, trading services, research services, and asset management. Now, can you tell me where would investment bank fit in?
Repeat the question, sir.
I'm saying we discussed that there is a buy side firm there is a sell side firm, right? How would you classify an investment bank? Is it a buy side firm? Is it a sell side?
The sell side.
Sell side.
Sell side.
Sell side.
Okay. Mostly you can say IB would fit in the sell side. Okay, when you're talking about raising capital or M&A or trading services or research services, that's the sell side part. But if you talk about asset management, there you have the portfolio management and fund management. Okay, so this asset management side of the business is like the buy side. So the buy side of the investment bank, whereas these would be the sell side businesses of the investment. Are we clear on this, guys? How the IB fits in?
Yes, sir.
Yes.
All right, so I'll take your attendance now. Ashutosh,
Present, sir.
Mansi, Mansi,
Present, sir.
Moksh,
Present, sir.
Parichay, Parichay,
So present.
Yogita,
Present, sir.
Anushka,
Present, sir.
Aditi,
Present, sir.
Diksha,
Present, sir.
Rudraksh,
Present, sir.
Reswa,
Present, sir.
Nasreen, Nasreen, anybody whose name is not mentioned? Okay. So guys, go through this and I'll ask you a couple of questions. Okay. So anybody can volunteer, guys. Which are the 5 pillars of a financial system?
Sir, financial participants, market, product, regulator, and services.
Okay. What is the goal of the financial system?
To boost economy.
Yeah, economic growth of the country.
Okay. How would we say that Financial system is robust.
There is a liquidity allocation of funds, infrastructure, low transaction cost.
Very good. What are the types of financial markets we have?
Capital
Capital
market,
market,
money market,
Money
derivative
for
market,
it.
forex
Forex
market.
market, derivative market.
What is the main difference between the capital market and a money market?
Uh,
In
The
capital market,
duration of capital.
the maturity period in capital market is over 1 year, but in case of money market, the maturity period is less than 1 year.
Very good. What is the difference between exchange traded market and OTC market? Is equity market, stock market part of exchange traded market or OTC market?
Exchange traded.
Exchange traded.
Bonds are exchange traded or OTC traded?
OTC.
Mostly OTC, okay. Forex. Forex guys.
Forex is for trading currencies.
Yeah, you exchange the currencies and they are traded over the counter. Okay, you sit across with the dealer over the table and you exchange the currencies. Okay, there is no central location in case of OTC markets, whereas in exchange traded markets we have a central location where all the trades go and get executed. What are the different financial participants?
Individuals such as issuer, borrowers,
Yeah, so
banks.
absolutely. So we can have companies, government, or individuals who may act as lender or borrower. Okay, they may have extra funds or they may need funds. Similarly, we have banks, which are different types of banks, and they can also borrow or lend funds, or they can be the regulator also. We have insurance companies. Yeah, we have life insurance, general insurance, medical.
Clearinghouse, custodians, deposit.
Yeah. What is the difference between a broker and a dealer?
The broker finds out the seller and the buyer, and the dealer deals the
Yes. Okay.
final.
Yeah. So the role of the broker is to find a counterparty for you, and it will charge a commission. Yeah. Whereas the dealer is the person who will deal with you. All right. Stock exchanges. So we have NSE, BSE, which help in the trade execution part. They help in matching the orders based on various rules. Yeah. Once the trade is executed, the trade is passed to the clearinghouse, which becomes the counterparty. This process is known as the novation process. And because of this process, we can say that the settlement is guaranteed in a exchange traded contract. Then we have custodians who are like the safekeepers for institutional investors. We have depositories which are holding the shares for retail participants, and they also do the legal change in ownership. Then you have the regulators which define the framework, the rules and regulations which need to be followed by everyone in those respective markets. Then we have various financial services. Different services are offered by retail banks. Their clientele is also different. Commercial banking, investment banks. Okay. Then we studied about various firms can be divided into two broad categories: buy side and sell side. Buy side firms are like the investors who are investing. Okay. So it can be like mutual funds, hedge funds, Then you have sell-side firms which are providing services to the client. Investment bank would mostly fall on the sell side of the financial system, but yeah, it provides some activities which are buy side. Example, asset management services of the investment bank is the buy side business of investment bank. Okay, so that's about it, guys. If you have any question, let me know, else we can close. Okay, I hope you understood, guys. Any feedback for the session in terms of the pace at which we went, or anything you found confusing? Let me know. Guys, did everybody understand what we discussed today?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
All right,
Yes, sir.
great, guys. If you have any feedback, do let me know. Okay. Thank you. Have a good day, guys. Take care. Bye-bye.
Thank
Thank you,
you,
sir.
sir.
Thank you, sir.